Welcome to your market wrap for Tuesday, February 10th, 2026. Today's trading session delivered a mixed but meaningful narrative as investors processed fresh economic data, corporate results, and positioning ahead of key releases later this week. At the closing bell, the Dow Jones Industrial Average extended its winning streak, notching all-time highs for the third straight session as investors rotated into big cap, defensive, and dividend-oriented stocks. According to reports, the Dow surged well into record territory, climbing by roughly 270 points to around 50,400, a psychological and technical milestone that underscores continuing strength in blue-chip names even as broader indexes showed caution. In contrast, the S&P 500 and Nasdaq Composite finished slightly lower on the day, with the S&P dipping near flat and the tech-heavy Nasdaq slipping more noticeably. This divergence between the Dow and the broader market highlights rotation under the surface. Money moved out of higher growth and speculative tech names that have struggled in recent weeks and into more stable, value-oriented sectors. Financial shares, in particular, faced pressure amid ongoing concerns around AI investment costs and sector dynamics, contributing to the broader indice's modest softness. A key driver behind today's market tone was the latest U.S. retail sales data for December, which showed stagnant consumer spending. Retail sales were unchanged when economists were expecting some growth. That weaker-than-expected consumption reading weighed on yields as traders adjusted their expectations for the Federal Reserve's policy path. Lower bond yields on the 10-year Treasury hinted at increased odds of future rate cuts, as the data heightened market bets that the Fed might pivot toward a more accommodative stance if further indicators continue to soften. Treasury markets echoed this shift, with yields falling to multi-week lows and reinforcing the narrative that slowing consumer demand could influence monetary policy decisions later this year. That backdrop has helped bolster defensive stocks and fueled the Dow's strength even as broader risk assets tread water. In commodities, precious metals and energy markets showed notable movement. Gold and silver both retreated from recent highs as the US dollar ticked higher, making precious metals more expensive for foreign buyers. And investors awaited the next batch of macro data, including jobs and inflation prints, that could better clarify the path for interest rates. Despite the pullback, gold remains supported on a structural basis as a safe haven amid ongoing macro uncertainty, and silver continues to trade with elevated volatility. Oil prices and energy stocks were also influenced by geopolitical headlines and supply dynamics. Pressures from shifting crude balances and strategic considerations around supply routes contributed to intraday swings, supporting energy sector performance even as broader commodity demand concerns linger. Turning to corporate news, several individual names stood out. Software and technology sectors saw mixed action, with some analysts calling recent sell-offs in software stocks a potential buy-the-dip opportunity, though sector stress persists amid investor wariness over AI spending costs and competitive pressures. Defense and specialty names like Kratos Defense faced headwinds despite participation in major government programs, as stock prices reflected investor skepticism about near-term earnings impact. Other companies, such as BP, made headlines by suspending share buyback programs in response to lower oil prices and earnings pressures, signaling caution among energy producers. Looking ahead, the market's focus sharpens on key economic releases due later this week, especially the delayed January non-farm payrolls report and the next inflation print. Traders are positioning cautiously, recognizing that those data points could meaningfully sway rate expectations and volatility across equities, fixed income, and commodities. Should jobs or inflation data surprise to the upside, markets may reprice higher yields and tighter monetary conditions, putting renewed pressure on valuations. If data softens further, it could reinforce expectations for rate relief and renew momentum across both defensive and growth-oriented assets. In summary, Tuesday's session underscored a market at a crossroads. The Dow's historic run amid mixed breadth reflects investor preference for stability in uncertain times, while broader indexes and sectors like tech and financials reveal lingering caution. Commodities such as gold, silver, and oil are acting as barometers of risk sentiment, and their performance alongside macro signals will be crucial in the days ahead. With major catalysts looming, markets are likely to remain sensitive to data surprises and policy implications as we head into midweek. If you want up-to-date financial news daily, please like and subscribe. We will see you tomorrow.